Well, good evening, ladies and gentlemen, and welcome to this tutorial, a webinar, I should say. I've got tutorial on the mind. I've been involved in a tutorial here in El Segundo, Los Angeles, for the last 2 days. Today is the second of our big, massive days, and we'll be going out for group dinner tonight and relaxing a little bit before we rip into it and start again tomorrow. So thank you for being with us, and I wanted to introduce you to a couple of the people who've been doing this tutorial with me and give you a little bit of a feel for what you might learn at the tutorial and how it might benefit you. And I also wanted to release to you today our new Fractalian program, which is in a fairly basic form at the moment, and it's something we're going to develop as we go along. But I wanted you to have it. I think you'll find some very interesting features in it. And certainly the back testing and support programs that come with it are going to give you a real eyeful about what markets really do, as opposed to what we many times just think they do. So thank you for being with us, and I'm going to close this down here, this PowerPoint, which is much smaller than we normally have, and I'm working on a different computer a long way from home, so I don't have the normal disclaimers, but I do ask you to remember the disclaimers, and you can read those at the Daniel Code website, and I'm also going to give you the contact details from our website with this Fractalian program that I'm going to introduce to you. If you'd like a free trial of it or anything else, you should go to contact Terry. You can see his email up on the page now. It's support@thedanielcode.com, and after I've shown you the start of the Fractalian program today, you're very welcome to contact Terry and get a free trial of it, and you can have this program free until we finish developing it. It's not ready for you yet by any means, but we've been waiting a long time to get the filters into it, and it hasn't happened. So I wanted to get the program to you, let you see some of its features at least, and you can start looking at some of the back testing that comes out of this, which is pretty extraordinary. So for your free trials, you've got to send an email, if you would, to Terry at support@thedanielcode.com, and then thereafter we're going to show you this Fractalian program, coming up on the screen in a couple of seconds, and there it is. We're going to explain all of that to you. It probably looks pretty confusing and dramatic at the moment. This is, I stress, just the raw program. We have quite a lot of development work to do on this, and as we develop it, we'll be showing you how we can make this better. Parts of it are pretty good. It's an interesting concept, and I'm just going to briefly introduce you to two of the guys who are here with us at this tutorial. One is Matt from Sydney, and the other is Brian from New York City. So we've got a couple of guys here from opposite ends of the world. What they have in common is they've both been brokers or worked in broking offices for many years, so they have a deeper appreciation of what they've been learning at this tutorial than some others, although we've got plenty of guys here and ladies. One lady, we have Timmy with us. And I think she'd enjoyed being the only chick here. And they're just briefly going to give you an outline or a feel for what they've been able to learn at the tutorial. And I've said to you over the past many webinars, it really all just depends on how good you want to be. If you want to be very, very good, I can make you very, very good. But let me introduce you first of all to Matt, who's briefly just going to say a few words to you. And after that, we'll have Brian from New York City give you a different take on things.
All right, well, good afternoon, everyone. Yeah, it's Matthew here. I suppose just briefly what I said to John today when having a chat in a small break was everything I've learned here was nothing I got taught when I was at JP Morgan, State Street, HSBC, Commonwealth Bank, or Ordinary. So the stuff I've learned today is nothing I got taught in 15 years of working back office and front office in broking. And I can only say, just read all the articles. I know for the last 10 months I've read every single article. I've got notes coming out of my backside. So if you do the work and you come to a tutorial, it has been quite a revelation. So I only have good things to say, but it has been quite an eye-opener coming from the deep financial background. And years ago I studied at the Securities Institute in Australia. I got my graduate diploma in technical analysis, and that's all garbage. So throw that away, follow John, and he'll probably buy me a drink tonight. Anyway, thank you very much.
Got him, Matt. Here's Brian, who's a New York City guy.
Hi, everybody. Brian here from New York City. I've been in the financial services industry since 1998 in a variety of capacities. I've been at mostly small hedge funds and watched them come into big hedge funds. I've seen all kinds of market cycles. For a lot of it, I was a fly on the wall watching some of the best money managers in the country do what they do. And having seen a number of market cycles and consistently, both personally and professionally, being frustrated by the inability of institutions to manage some of these difficult markets, that started me on a major educational campaign, particularly after 2008, and seeing the carnage in most everyone's accounts to really determine what really works in the markets, which then began, and a number of other so-called, let's say, esoteric types of studies, all of which you can effectively go down the toilet. After talking to John for a few days, for the very good reason that the type of analysis that John does simply goes to the absolute heart of price action, market geometry, market structure in a way that very few individuals know anything about. His ability to relay this information in a humorous way and enlightening way will absolutely change the way that we look at the markets. I traded options, made my first option trade in 1992. I was pretty hot stuff. Had the huge problem of it becoming a profitable position almost immediately. I think I made 3 times on it and sold it very and proceeded to suffer for about 5 years after that, thinking that trading was easy. So I've been doing this a while, and I can tell you that John Needham was really on something. So I'll give you back to John and have a good evening.
Thank you, Brian. And thank you, Brian, and thank you, Matthew. So we've got all of our tutorial folks here in the room. You are guests tonight, and wanted to let you have a bit of a feel of what we've been doing up here. It's also a beautiful day, I've got to tell you, at El Segundo. And we're going out to dinner tonight. So this is our group dinner. I'll be taking everyone out to dinner, and we'll be able to talk a bit about what we've been doing in the last couple of days. It's been pretty exciting. Anyway, the purpose of this, I wanted to show you the start of Fractalian. As much as we've done so far, we have just a whole lot more to do, but I want to show you these basic features so you'll understand what it is we're doing. This is basically a fairly raw and basic program. This is the start of it. We have development work to do on it. And I have to put a couple of sensible filters on it, which will comply, amongst other things, the Daniel Code trading channel, and probably we'll be looking at divergence against the CCI, which is on the bottom of your screen there. To start with, you can see just the bars on the chart. Better than 95%, maybe 95% of these trades exit the same day they enter. So those of you who want to trade on reduced margins here, you can, but let me show you the powerful back testing behind this thing. And if you just, once you've installed this, Terry will switch it on and show you how to get this program. Once you've installed it, you go to your toolbox and then click Fractalian, select Strategies, and click Fractalian. I should say, while I'm thinking of it, you can also create new symbol groups under this tab here. Set out the symbols you want to trade and name it as something that you're going to identify, because when we get into the strategies, it's going to ask you for what markets you want to trade. So now we go to strategies. We'll select Fractalian and we'll tell this program to edit run. And you're going to finish up looking at a box like this that says Fractalian strategy. The next tab is your data. You can put in the period you want to test it for, and you put in any symbol you want, or you can use the drop-down menu, and you can use any of the predetermined markets that the Trade Navigator has built in here. This is a pretty obvious one. This is the continuous 067 market. It's one of the codes that Trade Navigator used to designate continuous markets. And then you have this next block here, the sell settings. Under settings, you can put in your commission or not. You can put in your whether you're going to allow pyramiding or not. And then once you've done that, you simply set the time period. And this will run for as far back as you have data. If you want to run this back to 2010, 12, whatever you like, you're very welcome to. And I'll show you some of that summaries from that back testing. But basically, once you've selected the markets you want and the period, this is just going to run from 1st of January 15 to the end of data. You just press run. And it'll take a few seconds to think about it. This isn't a terribly fast computer. This is just a laptop that I'm working with now because I'm traveling. And we'll start to print out these returns, these numbers of what these markets have done since the beginning of the year. And you can see some are going to do quite well and some aren't. And this is, as I say, at this stage, it's the basic start of this program. We need to get a lot more sophistication into particularly a couple of directional filters, but I haven't been able to get those done so far. We'll keep working on them, but I'd like you to have the benefit of the program because some of this back testing is very instructive. It'll open your eyes to what markets really do, particularly when you start pulling out the figures month by month, which I'm sure you will do. You'll just be amazed how quickly these markets can switch from a volatile state to a semi-dormant state. Just ignore the huge numbers that are coming out on the top here with the letter J in front of them. Those are Japanese markets. So what you're seeing is those figures, even though they say dollars, they're actually yen, and you'd have to convert them to get a US dollar number. And as are a couple of the others, HS, about 5 down from the top is the Hang Seng index, or the futures on the Hang Seng in Hong Kong. But you can see, we'll just expand this a little bit, there are a lot of very worthwhile markets in here. This is the Swiss franc. This is a futures on a currency. It's traded at the CME. It's knocked off 28,000 in the 5 months so far, nearly 5 months of year to date. You see, we've just run this from January to year to date. G6E, this is the euro. This is another currency. Done very well. Here's silver. Pretty nice, 14,000. Here's gold. I know all of you are interested in gold, or a great many of you. And this program returned 12,400 odd in the 5 months to date. And that is a market that has a margin of, I forget offhand, but it's about $4,500. So, it's running at a couple of 100% on margin right now. And looks a good one. Here, RL. You can't actually trade that. That's the Russell 1000. It's doing very well. We don't think there's a lot of volatility or volume in there. E7, that's the mini euro currency contract. Those you want to trade mini contracts, looks pretty nice. PA's Palladium, that seems to be a constant favourite with us here. ZB is T-bonds, fairly small margin on that contract. DX is the US dollar index, LE's live cattle, GF's feeder cattle. Both of these have margins of about $1,200 or so. And you can see sugar has a margin, well, it was used to be about $500 or $600, it's up to about 900 now. But you can see there's a significant number of markets in here that have been doing well and are certainly worth trading. There's copper for you, RBOB, that's gasoline. These various markets. There are a lot of them in there that are very worthwhile. And this is just trading as dumb as it can right now. So we can certainly make this program a whole lot better, which we will get done in the next couple of months or so. But here's just an example I wanted to share with you that there's a run of the 067 contract. And I want to show you something that will interest you. We have for the S&P, we have the big contract, which is $250 a point, and we have the E-mini contract, which is $50 a point. So if these markets had nothing to teach us, we should be able to run the figures off the big S&P market, and we ought to be able to say, well, if we divide that by 5, we'll get the results for the S&P E-mini. And let me show you how that works. So let's start by running the big S&P. This is the pit session. This is one of the few markets where the pit is staying open. Most of the pits are getting closed at the CME. And this is we're just going to run this from the beginning of the year to make it pretty fast for you. So we do a bit of calculation. We find that we have a return of $46,000. Somebody here who's got a pencil or a pen, write that down for me, please. Anyone who can reach a pencil or a pen. So the big S&P has made $46,000 year to date, and we can look at that we've got some analysis in here in the Trade Navigator program. It's made $29,000 on the long side, $17,000 on the short side, and then I know a lot of you are interested in looking at this by weekday, and we can see that basically if you hadn't traded on Friday and hadn't traded on Monday, you'd have done you could have added 21,000 to that total. So there's some biases there. There's sort of things you can learn about with this back testing. So let's close that. We had, how much did we say we had there, Ray? 46,000? Okay, so now let's go to the night time or the out of hours. And this is going to be SP3 -067. You just type it in and it'll come up. And this is the electronic session of the big S&P. Same time period, we're going to run that. And that's only made $4,500. On the long side, it's been very bad. And the short side, it's been pretty good. One's cancelled the other out. Here's your weekdays. On this, you didn't want to trade Friday either. It's made all its money on the Monday, and you've got a decent number of trades in there to look at. The bigger your sample, of course, the more accurate this sort of seasonality is going to be. But nonetheless, I think we finished up by saying 4,500 there. So if we add that together, Ray, and what does that give us? About 50,000. 50,000, adding the two together, and we can divide that by 5 to get the comparison with the S&P E-mini. And we used to believe that these markets largely mirrored each other, and that the what's the word I've forgotten, arbitrageurs would keep these markets in play together. So let's have a look if that's true. We've just seen there's about 50-something thousand between these two big S&P symbols, and now we want to go to the E-mini, which is ES067, and that's the wrong one, so let me be a little more careful with that. ES-067, That should do it. And let's exactly for the same period run this, expecting that it should show us about $10,000. And it doesn't. It shows us a loss of $3,500. So what we can say from this, long side's no good, short side's no good. By weekday, nothing really much good here. So what we can say here is that this market is not a well performing market. In fact, this period of time it's pretty awful. But if we had been trading the big S&P in the day session and the night session separately, but we had been executing those trades in the E-mini, we would have made about 10.5 or 11,000 for this 5 months, which is going to aggregate to about 27,000 for the year on a market with a margin of about 6,000. So it's pretty nice. But here's something that you didn't know. The S&P E-mini does no longer follow the big contract, and the arbitrageurs aren't enforcing that compliance, and that's largely because all of the algorithms and computer programs and what have you are running on the E-mini and distorting it, and the true price signals continue to come from the big contract. Some of you will remember, those of you who've been with me long enough, that for many years I used to actually show only the signals and the charts from the big S&P contract, because for that reason that I knew they were the true prices. So that's the sort of thing you can do with this program. You can run all this back testing. I mean, you can even start trading it if you want to. And if we were to go to a larger sample, which I showed you earlier, we start with these 067s and run them out. You can make out your own list. We don't want that. 067s, we've got the right period. Run. When you've got more than one market, instead of giving you the summary, it will list them out down the page like this, as you can see this coming out. And once you have this, you can go to a market you want. So I said, forget these ones with the J's in front of them. They're all in yen. Here's the Hang Seng. That's in the Hong Kong dollar. You've got to convert that. MD is the mid-caps. You can't trade that anymore. That's the S&P mid-cap index. You can't trade that anymore. But here's the Swiss. This is the currency futures contract for the Swiss franc on Fractalian. And if you double-click on that, it will take you to the analysis page. So you can look at that and say, okay, 28,000 in 5 months. You can see all the other information it has in here. And this is a program that trades a great deal. You can see you've had 78 trades in 5 months, and excuse me, it trades pretty much every day and a half. On average, we can look at this and say there are the long trades. It's made almost all its money on its long trades, very little on the short side, and then we can go and have a look of whether there's any bias during the week. And you can see that there's a couple of days there that we really do want to trade this market. And that becomes even more pronounced when you go into some of the smaller markets that have options or sales behind them. This market here, LE, this is live cattle. And if we look at the weekday setup there, all of that money is in Friday's sale, or Friday's trading. Let's go out of there and let's go to the other one. GF is feeder cattle. Same thing, it's only about a $1,200-$1,400 margin, so it's running at about 300 or 400% for the 5 months. And then we go to the weekday signal. Look at this, the same thing. All the money's on the Friday. And that's because both of these markets are associated with very big auction commercial sales on the Friday. And they're obviously, the merchants are laying off into the futures contract. But, they're just little tricks that you can see and learn from this trading program, from the research of the trading program. And it's going to show you things in markets that, frankly, we haven't been aware of before. Some of this stuff we've understood intuitively that we suspected this stuff was happening, but we have never been able to prove it. So that's how it works. You can make up your own list of markets that you want to run this on, and some are good and some are bad. And from here, we would now go on and show you the summaries that I've prepared for you. This is the markets by month. Over here on the right-hand side, just let me make sure that the page has changed so you see what I'm seeing. Yes, it has. Here are the summary of these commodity markets by year. Here's 2012. Next column is 2013, 2014, 2015. And over here on the left, I've taken these out. Most of these commodities, I've taken them out by month. You can see the ones that are the more solid performer. You can take this spreadsheet and add to it yourselves, or you can create your own spreadsheet straight from the Fractalian testing program. Don't forget to sort alphabetical by clicking at the top of that page, and then you'll be able to just copy down the figures straight into a spreadsheet. So you can see which are the ones that have been most desirable there. The cattle we looked at, they're good. Feeder cattle, good. Gold's been very good. Wheat's been very good. Some of the others are not quite so persistent. An interesting point here is that equities haven't done very well at all. Here are all the equities. AP is the Australian Share Price Index. EMD is the mini mid caps. ES is the S&P E-mini. ES1 is the day session only of that market. GX is the DAX. It's done the best, but the margin's too big for most of you to trade. NASDAQ, big S&P, Russell, Dow, and ZX is actually the FTSE, the FTSE 100 in London. So you can see that none of the equities have done terribly well. Those that have had good runs have tended to be the bigger markets, and that tends to get magnified. You'd have to divide those S&P figures by 5 to get a realistic contrast to what would be happening in the E-mini. So that's the sort of thing you want to start looking at for what are the markets you're going to trade. And we have a couple of alternatives on that, which we're going to be running sim accounts on. Jerry Winter, who's here with us, has a new program where we can just run off the equity curve of each of these markets individually, put a moving average on it, and as these markets switch into volatility and profit and out of volatility and out of profit, we can stop trading them at those times, or we can switch in and out. We probably only want to trade 3 or 4 of these markets at any one time, and we're going to have those selection criteria there. So that's what we have for you on your on the testing of that. And let me see. Here is the what your program is going to look like. This is the strategy part of it that allows you to do this back testing, and this is what your chart is going to look like. It's going to have this CCI on the bottom here. You can have a look about divergence and when you think you should be taking trades and when you'd like not to. And the next thing we're going to put on it is the Daniel Code trading channel, which you should all know about. I'm sure you do. If not, if you look up into the videos tab, you'll see a video that I did a couple of years ago, which shows you how to put, excuse me, those trading channels on, and that will give you a very good idea of the definition of where a market's going, and you'll need to understand how you construct these things. But you can see that once you have your Daniel Code trading channel on, this isn't a good one, incidentally. In fact, this isn't even a valid trading channel anymore. It's become a regression channel, but it will give you an idea of where markets are going. You probably need a different chart to see this, but play around with that and see as well. Incidentally, these charts will take a while to open up in your browser because there is a whole lot of material that needs to go on them. Let's have a look at something else here. Let's have a look at, well, here's the DAX anyway. You can see that it's switched to the DAX because it hasn't come up with all its flags on it yet. And this is just a pretty standard laptop. It'll take a couple of minutes for that to filter through. There's quite a lot of data it's got to collect, and it's got to run all its calculations before it can post those flags on it, which will show you where you've entered and where you've exited. And once you've got that, you can see that in a market like this, when it's going to trend, if I can move this little go to webinar thing out of the way, we could, by putting on a trading channel very simply, it would immediately give us the bias. This is the trading channel that's going to work pretty much all the way into the highs it does. And we've got this connection with this early first move out and this second one as well, which makes it a valid Daniel Code trading channel. You can see that while the market was in that channel, you really wanted to be long, and if you were going to sell, you wanted to be selling somewhere near the top of the channel and buying somewhere near the bottom of the channel, or at least below the median. And that's the sort of filter we're going to put on this program. So any of you who are interested, please drop Terry a line at support@thedanielcode.com, and he will be happy to get you registered if you're not already with us, and to switch on your free trials. And once that's done, you'll be able to download these programs, including your chart should look like this. You should have that back testing facility which I've shown you, which will live under your Trade Navigator little motors, and it's called Strategy. And what comes out of it is your strategy basket run, and you can examine any of these markets simply by double clicking on them. And here's silver, for example. It's pretty nice. It's a bit of a big margin. So let's have a look at gold if we haven't already. Double click on any of these and it'll bring up this summary analysis, in which you can look at the long trades, the short trades, and you can sort it by weekday, and a few other things as well. So these sort of biases are pretty strong. You're getting enough numbers in here to make it start to look realistic. Naturally, within reason, the more data you have, the more reliable these sort of seasonal trends are. But don't think they'll last forever. They don't. Nothing lasts forever. So you need to have a regular updating program. Perhaps once a month you need to run this seasonal analysis and make sure you're still on the right side of it. But it is quite dramatic on a lot of these markets. I've shown you live cattle and feeder cattle today. It's certainly very dramatic. When you capture that, it goes back to your summary. So you'll get the hang of it. I was going to say you can't break it, but someone probably will. But that basically is how it works, and that's what you can learn from the back testing. So let's have a look at that. Who have we? Bear with me, folks. I'm doing this all on one small screen. Sage, hello, darling. Have we had a big DC party yet? I have. I started without him. Sage, I was here on Monday night, pretty well on my own. There might have been one or two guys here. I certainly had a party Monday night. Yes, the sound is fine. These people you can't hear. I'm sorry about that. It's not a problem from this end, but we will be posting this webinar for you. It's being recorded, and we'll have that up maybe by this time tomorrow, and we hope you enjoy it. So that's about it, folks. We're going to keep this fairly short and sweet here. We don't seem to have too many questions. Scott, when will the trial start? Now. It is. You can start trialing it right now, Scott. This is free for you guys. Go ahead and start your trials. Remember what I've told you. It's not completed yet, but you can simply what I've shown you here by just looking maybe at putting a filter on to define the trend. You'll be able to improve the performance quite dramatically. But it's ready for you guys now. Go ahead, drop Terry an email, and he'll set it up so you can download both the program that it runs on, and also the also the back testing program is very important. You should be able to see here, if I can move this along, this is what this thing does. That just a sentence for you. I've got the questions page over it. This will tell you exactly with each signal where to enter, where to put your stop. So you can double click on this, and if we right click on it, we should be able to get it to, I think it's right click, or might be a double click. Let's see what we've got. I'm not quite sure why this isn't opening up here. It may be something to do with the GoToWebinar program, but you should be able to click on these. Maybe it's on a different chart. You can see the orders for tomorrow. Because we're flat here, you've got a buy order up there and a sell order down there. And once you're in a trade, let's find another market that might be helpful. It does take a moment for these to open up. You'll see that we've got to wait a moment or two for this to load up and get the flags up on it. No, in fact, it's just thinking about it. Here we are, we've got the flags now. This has got the news, these got the trades for tomorrow on it. Buy at that number, sell at that number. Once you're in a trade and you click on it, as I'm doing now, it'll tell you what the rest of the orders are, how to exit, and how to pyramid for the next trade and what have you. It's all pretty intuitive. I think it's pretty solid. Just click on it and start seeing what you can learn from this. So you can certainly, there are some markets that are attractive enough. You can start sim trading them now or testing them. And as we complete this work of putting on the filters, it will just get better and better. So go ahead, contact Terry, get your downloads done, and just see what you can find out from the back testing. I think the back testing alone is very, very interesting. Start taking out month by month what these various markets do, and you will be quite amazed. So that's about it, folks. Thank you very much for your attendance today. We're going off for a nice dinner at Manhattan Beach, and have a start of a little bit of a relax for the evening. So thank you for being with us, and I'm glad you're going to have the opportunity to get started on Fractalian, and I wish you very well with it. And I wish that those of you who are not with us here in El Segundo, I wish you were, because we've certainly had a good time, and hopefully everyone's learnt a lot and taking their trading to the next level. So thank you, and good night.